Similar to Fibonacci price analysis methods, there is no universally agreed upon explanation of why the square root of a price level of a swing point tends to mark intervals when important events are more likely to happen. Similar statements could be made about other time analysis methods, though it is clear time intervals and ratios only have greater meaning when applied under the appropriate conditions of clear swing points. If the square root is a smaller number, it can be useful to round to 2 decimal places. An interval can be used for a long time, even when a trend reverses. However, it is generally better to plot a new interval once a large trend reverses, such as the new uptrend starting in November. The small 7-bar interval is useful for identifying the end of flat ranges. First, the break lower after the gap down, and later the triple bottom completion. Longer durations can be covered with a small square root by moving the decimal place to the right. This results in an interval roughly 10 times longer. This longer interval does naturally miss smaller details and crosses over larger features, such as the 2 larger upswings marked in the blue regions. From the 53.19 peak, the rounded 73-bar interval doesn't approximate any major reversal, but instead covers the significant event that was the break, completing a double bottom. A smaller 5-bar interval from the first upswing of the double bottom was mainly useful for coverage in identifying resistance stalling the uptrend around the 36 price level prior to the break higher consolidating into May. Moving the decimal of the square root 1 decimal place for a rounded 52-bar interval covers a longer duration and many clear swing points and reversal areas. Even when the uptrend is halted several times by sizable downtrends, the approximate time of the gap downfill in early 2021 is also identified. Similar to the 5-bar interval with the double bottom, this 6-bar interval from the low of a triple bottom is best used for short-term approximation of when the flat range could end. In this case, steady bullish price action and volume were likely signs the uptrend would break over the short-term upper boundary around 42 towards the interval line in early November. Moving over 1 decimal place to the right only covers 2 congestion areas and no major reversals or breakouts. This is likely due to the triple bottom being a small feature in the broader context and the 62-bar interval lining up with an upswing that was not a major feature in late June 2020.